Blackstone told one of our investor friends that they will make more money in data centers in the next 5 years than they've made as an entire fund over the last 20.
Hello and welcome to Profit and Property. I'm your host, Austin Masket, founder and chief investment officer at Riverly Capital. Prior to founding Riverly, I spent 10 years helping the ultra wealthy build their real estate empires as an acquisition director and portfolio manager. Our guests today are Jon Jensen and Kirk Langston of the great state of Utah. Jon is the chief executive officer at DCPC based in Orem, Utah. DCPC is a data center development firm specializing in island power grid independence, including the 100 megawatt Summit Ridge data center. Kirk Langston is the chief investment officer for Milar Capital, based in Salt Lake City, Utah. Milar Capital is a real estate, private equity, and development firm specializing in high demand asset classes, including data centers, industrial, multifamily, and residential developments. Jon, Kirk, thanks so much for joining us today.
You bet.
Thank you, Austin. Great to be with you.
So glad you're here. So tell us, what is a data center, and who's using these things? How do you invest in one? Start from the top.
Yeah, data centers, those facilities that are all across the world that specialize in giving enough electricity to all the servers and the computing power, all those chips that you hear people talk about in the news, and give them enough cooling capacity to maintain their productivity and their lifetime, their lifespan. We're storing data there. We're processing all those applications that we like to use. We're basically, all our streaming media that we like goes through a data center. If we're submitting a transaction with our banks, it's going through a data center. If you're making a cell phone call, it's most likely going through a data center. All the digital world that we touch goes through a data center.
Interesting. So is this like Google, Meta, Facebook using them, or how does it work?
Yeah. So those bigger data center, those companies have data centers, and Google, Meta, Microsoft, Oracle, AWS, which is my Amazon, they have a lot of big data centers, and they're kind of the movers and shakers. They're the hyperscalers. They're the guys that have just ginormous data centers, and it's mainly just to service their clients, right? Their customers, processing, shopping on Amazon. Google's processing YouTube and every other platform they have, right? Just their emails, and they have a lot of digital assets that they manage. Microsoft has their products, so everybody has their customers that they're trying to service. But then there's a whole nother tranche below the hyperscalers. There can be really big guys in there, little guys in there, and they're providing the exact same service, but for just customers. That could be ESPN, that could be CNN, that could be JP Morgan, that could be your security company, that could be your Netflix. Netflix might have their own data centers, but if you're a business and you need space in a data center or need processing power, there's a high probability you're not going to go to Google and you're not going to go to Microsoft or Meta. They're generally using their own stuff, and I don't know exactly if they allow certain customers into their data centers. For instance, eBay, they only have eBay inside of their data center, and that's how kind of Google is, and Meta is.
And so I know AWS, that Amazon Web Services, they farm out a lot of their customers' data center needs to to their own systems, and then it sounds like there's sort of another tranche, sort of like the Shopify of data centers, if you will. Is that about right?
Yeah. There's over 200 data centers in the world. About 6 of them are those big hyperscalers, and then there's everybody else. And some cater to the government, some cater to the fintech industry, some cater to the e-commerce world, some cater to any and all. Just if you need electrons and you need space, come on in. You can put your servers. They all have some market purpose, meaning they're trying to get their market share in some way. And generally, every data center is created to service a certain segment of the market.
Gotcha. Okay. So tell us about your experience with them. You've been in the industry for 25 years or so. So maybe you could give us an idea of kind of the types of deals you've worked on, and we could talk a bit about the 100 megawatt deal that the project you're currently working on.
Yeah. So it's kind of a traditional approach. A lot of data center companies come from real estate development. Not all of them. Some of the really bigger data centers out there that aren't hyperscalers were real estate developers once, and they just had people come to them and go, "I need a building, and I need a lot of power in them. Can you build me something?" Right? And so someone out there goes, "Fine, I'll build you a building. You can be my tenant." That might have been Google. That might have been Oracle. It could have been whoever, right? And my background is 25 years in land development, and my primary objective was to secure the investment of the property to make sure that the next stage of vertical construction had nothing to keep it from progressing, meaning the investment was now fungible, the zoning was now done, the permits are now complete, the coordination between all the utilities is now understood, and at some level, there's my career has taken me through the entire development process, where I was now raising my own capital, going out to good folks like Kirk, and seeking for that help to lift it to go from just a land acquisition to a vertical product. And I've done everything from subdivisions to commercial, retail, to apartments. And for the last about 8 years, I've been doing light industrial. So these big tilt-ups that you see out there that you have a lot of fulfillment centers in, or some other kind of light warehousing product. In that process, data centers started knocking doors all across America, asking if we thought our projects, our industrial buildings, could get enough electricity for 100 megawatts. And for me, I was like, sure, why not? What did I know? And eventually I learned, like they knew already, that there was no electricity, at least at scale. And 100 megawatts is a lot. Not that a lot of people know Provo, Utah, but Provo, Utah is about 80 megawatts in the winter, the entire city. And then in the summer, they're about 200 megawatts. Provo is the second largest city in Utah. And imagining all that power that Provo consumes and put it into one building, that's pretty intense. And there's even bigger ones. There's gigawatt data centers out there, like Tesla's doing. But wow. Google has them. They all have them. All the big hyperscalers have humongous data centers. And generally speaking, when we found out that you can't get power from the grid, and this is a problem all across America, and this is why we're on the call today, is all the people who have electrons, they have them and they're going to keep them. They're not going to let them go. So the guys that are movers and shakers in the data center world, they put their arms around their electrons, and they're not going to let anyone else have them. There's a whole bunch of people that wanted electrons. The utility said you can have them. They started building a data center, and the utilities all across America said, just kidding. We have to take those back. We actually don't have those electrons. So sorry, right? That is what created more or less the sudden surge of our existence. When we were approached to find 100 megawatts and couldn't find it, we eventually did what everyone else did. We bumped it around looking for people to, see if they had 50 megawatts or 100 megawatts or 500 megawatts. And it was very clear very quickly, there's nothing. We asked for 1 megawatt all up and down Utah. And Utah is just one state of 50, right? But we found that what we are doing in Utah, the same thing is happening in every other state. It's very hard to find any amount of electricity. And we can't even get 1 megawatt, which we're like, okay, so if we can't electricity, what are we going to do? So I just turned to my partners. Thankfully, these are partners that have built some of the biggest power plants in the world. They have been a part of island power plants their whole careers, and they were instrumental in making sure these power plants stayed on budget and on time. They're very complicated. Power plants are not just a simple project, nor are data centers, right? And so they said, let's build a power plant. And this was early enough in this period of time where people were trying to figure out if there's any more electricity. And we just saw the future and went, there's no electricity. So let's just jump right to that conclusion that there won't be electricity, and let's start developing a data center that has its own power plant. And in the beginning, nobody wanted to talk to us. Nobody wanted to hear that. which was a little stressful, but we knew what we knew. And that is, if you need electricity and this business needs, data centers want to grow. They have tons of market share that they're trying to go after. The market is growing. They want to get their share of it. We just said, look, we know how to build power plants. We know how to deliver at scale. We know how to keep it on schedule and on budget. We can develop all the things around this idea to make sure it's not make-believe, right? To make sure that the gas is really, these are our data centers are naturally gas-fired island power plants. You have to get air permits if you're going to do that. These are fairly significant in any city that you're going to do it in, because there's also no transmission. There may not be any electricity, but there's also no transmission. So if you're going to stick a power plant way out like they used to be or how they are today, they're far, far away, you can't get the electricity to where the data centers want to be. So generally speaking, we did all those things. We call them showstoppers, and we removed all the showstoppers to prove to the market that you can build a power plant with a data center in 18 months. And that right there was a huge shock to the industry. Everybody was like, wait, what are you talking about? And while we were kind of, new to that paradigm, meaning island power plants for a data center, everybody else, 99.9% of data centers are connected to the grid. That's the paradigm they come from, which is good, but they're all stuck. Every one of them, they all want to grow. They can't. They have a footprint somewhere, and they have no more electricity to service it.
So what you guys have done is removed those boundaries that, like you said, to create a data center that you can not only build in a short period of time, but you can grow as the needs of the data center grow.
That's right.
That's amazing.
So we say this: we're building on the back of power a data center instead of the reverse. We're building a data center and then ancillarily or supplementing the business with electricity. No, we turned it all the way around and said, we're never going to have this problem that all the other data centers have, and that is being restricted with electricity. We're just going to always just make our own, which means this only works in certain spots, right? You may not be able to do this in some parts of the planet, but we went out and made sure that we could get the air permit, and you could only get the air permit if you can define your emissions. You can only define your emissions if you can define your power plant. And so we had to define all those things, calculate, engineer, all that fun stuff. And then we could submit to the state and say, hey, this is what we plan to do. And they came back and said, yeah, we're going to give you an air permit. And once we knew that, we then started working on getting our gas from wellhead to burner tip. That means transmitting it all across, the mountains, at least here in Utah. And once we had that done, we then worked on the entitlements. And we went to the first city in Utah to allow an island power plant in the middle of their city.
Wow. That's amazing. And so that's in Provo, correct?
This particular data center is in a city called Santaquin, Utah, which is about 15 minutes south of Provo.
That's amazing. So what you've done is incredible. And that kind of brings me to, my next question is, what is the problem in the market today as far as real estate and data centers? I know you've talked a little bit about how, the market is just not really clear or doesn't really understand how a data center comes from zero to fully built. And so maybe you could tell us a little bit about what's going on in the market that investors should, be wary of.
That's a really good question. I think those are the things that people are trying to do. Here's what we learned. Tons of investors, accredited investors who placed their money in various firms, were being told by the managing partners of those investment firms that they're going into data centers. And they told about the scale and the margins that they're going to be making. For instance, and I'm going to probably need to be corrected on this, but I believe it was Blackstone. Blackstone told one of our investor friends that they will make more money in data centers in the next 5 years than they've made as an entire fund over the last 20. So that was Blackstone's paradigm of how much money is going to be made in data centers. And so he turned around and talked to us and said, look, I don't want to invest with Blackstone. I just want to be in. He knew what we were doing. And he said, I just want to invest in data centers directly. which is unique. Prior to that, you had to go through REITs, you had to go through Blackstone, BlackRock, Vanguard, all the big guys, right? Apollo, and those most money would flow through those paradigms. Obviously, Google and Meta and those guys kind of self-fund their own deals, but if you were just a person who wanted to get into data centers, you had to go through the traditional routes, just because the data centers kind of stayed in that tranche. Once electricity became difficult to source, our version suddenly became very interesting. We were down here where everybody's like, yeah, whatever, who cares? Everybody kept looking for electricity, thinking they'd find it. We knew that there wouldn't be any more. And once people kind of figured out that there was no more electricity, all that work we had done prior to that point, we suddenly shot to the top, and people were like, can we talk about that again? That's really interesting. You can get a data center, like you can build your own, you can do that. And it wasn't just, and you're not just doing a power plant, right? A power plant is a big idea. These are small power plants. They're still humongous because they can power a whole city. But if you drove by one, you wouldn't even notice it was a power plant. It looks just like the data center. And then on top of that, they still have to be clean. They can't belch out a bunch of pollution, right? They have to still meet all the EPA requirements. They can't be loud. They can't be, noisy. They can't disrupt the community. But then in addition to that, they have to still give the price per kilowatt that the market still expects, right? And so we had to do all that stuff, which means your margins are still in place. What we found and what we are advocating is the cool part with island power plants is you have the ability to scale better than other people. You're not beholden to the utility or the grids, right? Which is cool. But you also have the ability to make your electricity more reliable and redundant. The grid is only 99.6% reliable. So what happens is when you get grid power into a data center, the data center then has to augment it with something else to try to create the reliability factor. So we are designing a tier 4 data center. Our customers may request a tier 3 or tier 2, but it's okay. We're designing a tier 4. And tier 4 means we have 5 nines of reliability. So that's 99.999% reliable. That means there's like 8 minutes of downtime throughout the whole year. That's very, very reliable. There are tier 4 data centers all across America. If you do like a tier 1, I think it's like 3 weeks of downtime. I think someone's probably going to correct on that one, but it's the grid in itself is not planning to be up as much as a tier 4 data center. So that helps you understand what you can do with a island power plant. In addition to that, this has now brought the data center down to a level where investors can invest directly into the capital stack, right? They can become LPs. And this is their chance now to jump into the data center market, which I believe is going like everyone, a lot of folks, it's like data centers are just going crazy in terms of growth and optimism and potential and profit. The other thing we tout is islanded power plants with a data center, meaning they're on site together, not connected to the grid. We can actually cool the data center better than a data center normally can, because we have a power plant that can recycle that heat out of the data center, which maybe is nerd talk for a lot of folks, but we then get to make another 24 megawatts of electricity from that. All the other data centers, generally speaking, they exhaust it, just goes to the atmosphere, which is fine, but they spend up to 25% of all their electricity on a data center to cool the building. We spend 3 megawatts to cool the building, and then we generate another 24 to augment the entire process. So that is like a revolutionary statement for the folks that are in data centers. They would be like, that's crazy, but you can do that with an island power plant. With the grid,
that's amazing.
You don't have that option.
Can't do it. So it seems like, most of the more unscrupulous versions of Kirk and myself, who are in the data center market, are saying, yeah, we'll just, we'll find a site and we'll break ground and then we'll worry about the power later. And then, but don't worry, it'll be done in 18 months. And, how are we going to cool it? Well, I didn't know we had to worry about that. It's just air cooled, right? And, but Jon, you've clearly made, the leaps and bounds to figure all that stuff out way before you take shovel to dirt.
Yeah, I admit we've gone probably further than most data centers go, but we knew we had to do all that because we were doing something that was somewhat new and unique to the data center world. Good news is it isn't new to the rest of the world. The rest of the world has been building island power plants way bigger than 100 megawatts because, like the petrochemical industry, they never have enough electricity to run their facilities. So they're always building their own power plants, and they're like gigawatt scale, right? And so for that industry, they've always been living in that paradigm, and they're like, we can't go down. We don't have the margins like a data center. We have to be efficient. We brought all that into the data center world. For us, that was just an easy decision because that's the world we come from. And when other people try to go out and do data centers, which is the traditional approach, nothing wrong with it, they could do what you said. They could just do all those things. Like they'll just work, they'll get entitlements, they'll work to get electricity from the grid, and it will all work out because it generally would. It generally would. Today, unfortunately, every data center in America who wants to grow, meaning they want to go beyond their footprint today, they don't have a choice other than probably waiting for the grid to catch up, which they estimate to be 5 to 6 years out, or they build their own power plant.
Wow, that's amazing. So you actually used the technology, if you will, of the oil and gas industry to create a more environmentally friendly data center and power plant than you would if you used the grid that the government put together. Is that what I'm gathering?
Yeah, like imagine 25 megawatts is a lot of electricity. When we talk about data centers, we're throwing out gigawatts and hundreds of megawatts, and it just all kind of feels like a number that's no biggie. But for the world that understands electricity, and if you walk into a utility and say, hey, I would like 100 megawatts, they will literally be like, you want a what? Like you are asking for so much electricity, yet we're all doing it. That when you talk about 25 megawatts going to cooling a 100 megawatt facility, and then you just let all that energy just go out to the atmosphere, that's waste. It's waste. You spent all that money, you burned all that fuel somewhere, might have been at a power plant far away, and then it just went out to the atmosphere. And so thankfully, we can take all these lessons learned, all that experience, all that acumen, all that knowledge and skill to say, we can do an appropriate power plant, meaning permitted for the locale, doesn't disrupt the community, and generate and power the data center in a way that is like, we'll call it 97% efficient versus like 75% efficient. And that's a way to think of it. And that's a big deal because now you can produce the same amount of electricity and move and power more servers. That's it, or more chips. Mm-hmm. While everyone else has to say, well, I have 100 megawatts, but I only get to use 75 megawatts. We get to use 95 megawatts, which means the data center is more productive, more profitable.
That's amazing. So, what are the numbers in these kinds of projects? Like, if you could kind of summarize that for our listeners.
Kirk, you should talk.
Yeah, maybe I'll talk a little bit here on this. So it's the data center world has become really the holy grail of asset classes in real estate. There's an insatiable demand for investors to get into real estate projects that involve data centers, and that's because vacancies are tremendously low, well under 3%. Rents are growing annually at 11% or greater in most cases. We're seeing absorption. Everything's getting absorbed. When data centers are in the construction process, about 73% of those are all pre-leased, so they get leased up very quickly. The lease-up period and stabilization period involved in getting the rents flowing in the data centers once they're constructed and ready to go, it's exceptionally low. And so that what that means is that the returns to investors are very high. And there's an opportunity, to stay into that investment for a long period of time, to be able to, take advantage of the income stream that comes from that on a regular basis. If you were involved as a limited partner in that, then you're able to get distributions on that on a regular basis for a period of years. it can be a great investment vehicle for real estate investors. The problem has been that it's difficult to find. If you go to, because it's dominated by institutional capital, and if it is for a large hyperscaler where there's just one tenant in the building, typically most of that is going to be financed through debt. Potentially up to 100% of that building can be financed through debt. In some cases, if you've got one or two tenants, you can get, some cases, 90% of that financed through banks and other institutions, which means that then for an investor that wants to come in on the equity side, that sometimes it's difficult to understand, first of all, what data center opportunities exist, because most of the institutional groups will take equity positions as well. They'll deploy large funds. So you may have money that you've contributed into a fund, or capital that you've deployed into a fund that's getting allocated into a data center that you may not even know about, right? But if you're an investor, just a regular investor, and you want to specifically find and invest into a data center opportunity, it can be very difficult because it's dominated by institutional capital. And so part of what we're trying to enable here, and as Jon's alluded to, and Austin, you kind of alluded to this as well, that there's different phases to the process of getting a data center constructed. And in this early phase where there's entitlement work going on with the city, some permitting and site work approvals going on for the building itself, there's a lot of design and architectural work that goes into that, and there's a lot of cost that goes into that. And so in our case, we are making it available for investors to get involved in early stages during this entitlement phase, which will produce tremendous returns and in the relatively short periods of capital allocation. We would expect somewhere between 9 and 18 months at the very most there to be able to return that capital with tremendous returns. And so, but it is the most in-demand real estate class of all real estate classes right now for a lot of those reasons.
Mm-hmm. That's amazing. So actually, that brings me to my next point. We've actually combined forces a bit, Milar Capital and Riverly Capital, to create an investor guide for investors. It'll have 10 things that you have to know before investing even $1 into data centers. If the listeners are interested in taking a look at that, you can take a look at our link in the description, and I will guide you straight to it there where you can download the ebook.
That'll be a great resource to investors looking to invest in data centers.
Perfect. Great. So what are the risks? Speaking of investing in data centers, what are the risks for LPs or for organizations like you guys have, Milar and DCPC? What do investors need to look out for when they're looking at these kinds of projects?
Well, so one thing they want to look out for is just who is behind the project, right? Who's the general contractor? Who's doing the work? Basically, all of the entitlement work. Entitlement work has been famous in the past for having delays in any kind of real estate project. Cities can oftentimes take a long time to approve things. There can be a lot of red lines and reviews on site plans and in building plans, and getting all of that exactly right and getting it through planning commissions, getting it through city councils. There's a lot of work. Jon is actually an expert at this and has actually done most of this legwork for our project. But there's still some entitlement work to still be completed before vertical construction can be completed. And so, if you're looking at that, if you're starting from square one and you're an investor and you're looking at some data center project across the U.S., you'd first want to look at, hey, how far into the entitlement process is the project? Do they have permits? Is the land permitted? Is the air permitted so that you can exhaust into the atmosphere, for example? How far are they with the design and architecture of the building itself? What's involved with that? Do they have, most of these grid related or dependent projects are 5+ years out in order to get operational and to get the power, as Jon's alluded to those challenges. So you have to take into consideration all of those timing risks. And then you have to look at what estimated time adjusted returns look like. You need to make sure that it's financially modeled and underwritten by professionals. This can't just be somebody just hacking together an Excel spreadsheet. That really requires tremendous amount of data. And that data is coming from a number of different sources. And so all of that really needs to be triangulated into the project so that an investor can evaluate, hey, how much entitlement risk do I have? How long is my capital going to be deployed for? And ultimately, do we have other dependencies that are outside of our control as an investor, like such as getting grid power, that can really make that investment more risky? John, I don't know if John, you probably have some additional thoughts on that, but those are just a few things, Austin, that come to mind.
Thank you. Yeah, maybe I can just add a couple thoughts. A lot of people are being approached with data centers right now. Lots and lots of people. And both customers, the people that go inside the data centers and put in their racking and their servers, and then also from the investment side. So you have traditional data centers that are being told, hey, from a developer, I have a data center. You have data centers telling their investors, hey, we have data centers. And then you have the customers saying the same thing. And quite a bit of friction has entered into the market where people are saying, we have 200 megawatts. We want you to come in. You guys did 2 data centers last month or last year or the year before, the last 5 years. Come into this next one. What's happening is people are selling and leasing space inside of a data center that has no electricity, meaning there's not even a brick. It's just an idea. And so customers have started to figuring that out. Investors have started figuring that out, that they're like, wait a minute. What do you don't have any electricity, or you don't have any gas to make electricity? What's your plan? And if you watch the market, there are some people saying, I know, we're working it out. Don't leave, right? And that's not the worst idea, right? But sadly, it's taken so long, over a year, that a lot of those customers and a lot of those potential data center buyers, the bigger guys, have to go, hey, we're bailing. We can see you have no way to get power. You have no path with the grid, and you have no other options that we're willing to tolerate. And so those investors are looking around going, hey, I thought I was investing in a data center. Like, what the heck? And they found that it just never materialized. Same thing for the actual data center operators. They're like, we really wanted to give our customers space, but we just can't give it to them. We thought we could have it. People committed to us. And so as an investor, I would just say, just like Kirk said, what is your access to power? If it's from the grid, not that that's not possible, but you just have this really tiny window of maybes. Like, you might have power. The other only option is you might have power in 5 to 6 years. So you're willing to wait. That's not the worst idea, right? And the last one is is you build a power plant. And so if you're going to build a power plant, that's great. There's a lot of folks that know how to build power plants. Can they get it done in 18 months? Can they get the air permit? And do they have access to the gas? If they have all those things, you're now in a category of like, well, this might work. The economics still may need to be proven, right? You might need to look through the pro forma and make sure you're happy. The next things after that is, do you have access to the generators? And I don't mean, here's what happens in the marketplace that I seem to be constantly interfacing with. People say, hey, Caterpillar, do you have generators? We do. Okay. Hey, investors, we have generators. They have put in no orders. They have done no definition of what generator they want. They just say, do you have them? That's not good enough. You can't just put any old generator in a power plant. You can try, but generally that's a very expensive generator, or it's a generator that can't get an air permit. These generators generally are not meant to run 24/7. So you have to have very specific generators that run 24/7. If you're going to do turbines, we are not doing turbines. Turbines take like 5 years to get. There are people out there saying that they can get turbines tomorrow. I'm like, that's cool. I hope they do. Problem with turbines is they usually take like 5 years to get. They just take a long time. So everybody has their approach to solving this, and our approach is our we'll call it our own definition. And then you say, do you have gas? And they'll call up the gas company. Do you have gas? They go, of course we have gas. They won't tell them how much. They won't tell them what quality. They won't tell them what their reliability requirements are. And the gas company's like, you never asked more questions, so we're just going to give you a simple answer. So guys like us, not that we're the only ones that can do it, we had to go and answer all these really tough questions. We made the gas company go back and do like 100 more. I apologize. I think the word is spectrometry, where you actually look at the atoms inside of your gas sample and say what elements are inside of your gas, other than just your typical pieces of methane and hydrocarbons and other things. We needed to know everything, because when we burn a lot of exhaust, that's an air permit variable, and most people haven't gone that distance. And so I'm just saying, it's a lot harder to build your own power plant than most people think. And we don't blame anybody, because most people are coming from the data center point of view. And they're just like, what? In the past, I just called up the power company. Can I get power? They would say yes or no. Generally, it took a little bit of time to say that. And then they just plugged it into the building. Easy peasy, right? The hard work was getting the building built. Today, you have to also model the power plant. And that means you have to know a whole bunch of details and special stuff. So back to the investor. Not that you need to get in the weeds as an investor to that level, but if you're being courted to get a data center, you should just know that if they're going island power plant, that's awesome. And it's a lot of hard work. And it means they had to do a whole bunch of things to actually make it feasible, which they might have. I think a lot of people are going to be following where we've already figured out. And if they're going to get it from the grid, when? That's the big question, when?
Right. If you're 5 years out to get power, and you've broken ground and you've got debt and you can't bring in any income, high likelihood is you're going to give that building back to the bank before you ever get any customers in there, right?
Yeah, it's really stressful. And I know 3 data centers right now in Utah in that situation. They're half built.
Yeah.
And then Rocky Mountain Power, sorry, maybe we pulled that back, and those guys are now scrambling to find electricity, which again, there's only one provider of electricity in the state, generally speaking, in that volume. And just to make it worse, they said, fine, we'll build our own power plant. And the city wouldn't let them do that. So they took it way out in the boonies, and they started permitting that. And then there's only one company that can transmit that, the same utility company. And that same utility company goes, I don't have any room to transmit your power. And they're like, wait. So they started a data center, and then they started a power plant, and both got like, and it's just like, oh, stressful, very stressful. Those guys, obviously, my heart goes out to them, because I don't want any ill will going to anybody who's in our business, right? Because it's already hard enough. That's what they're dealing with. That's why our project is so interesting, because we just said, let's avoid all that. Don't play that game. That has been the game forever, which has been a good game. America hasn't been investing in more electricity for a very long time. All the solar electricity that they've been investing in, which is good, and data centers love that stuff, still required a power plant to attenuate their power, meaning the electrons came into the grid in one way, and a generator had to spin to get it to go in the same sequence of hertz. And so if you get rid of your power plants and you have 100% solar, technically all our widgets won't work. So
amazing. Well, guys, it's been an absolute pleasure. Thank you so much for joining. To all the listeners listening, definitely take a look at the link in the description if you want to get that investor guide. You'll get 10 things you absolutely must know before you put $1 into a data center. So take a look at that. If there's anything else, Kirk and Jon, you guys want to add before we end here?
Austin, we're really excited to be partnered with you, Riverly Capital, and we're excited to make this opportunity available to investors that follow or listening, or people that you're connected to. This is a great opportunity, and we're very excited about partnering with DCPC to making this just a huge success. And there's more to come. There's many more to come. So this could be a really long-term, exciting journey for lots of investors to get involved.
Absolutely. Yeah. So make that a little clearer if you could. So you have a current project that you're working on now, and that will be available to investors in the future. So if you're interested in becoming an LP and investing in that project, download the guide. That'll get you on the list to get first right of refusal, if you will, on the project. All right. Well, thanks so much, guys.
All right. Thank you. Have a wonderful day.
You too.